What's up, guys? This is David, aka Reverse Long, and today I have the pleasure of having Pradeep, aka Stockbee. So Stockbee, I've known I followed him for a very long time on the in the trading world, and I know him specifically through Kwalmagi, I believe. Had learned a lot of strategies from Stockbee, and I saw Stockbee recently. On some podcasts and a while ago, and I decided to invite him on the podcast. So it's been a pleasure to, hear back from Stockbee and, wanting to do the interview. And here we are. So, Pradeep, Stockbee, how you doing?
Good, good, good. Good to be
Nice.
here. Yeah.
Yeah, great. So, so first I want to get started. Typically we do like a background on
Mm-hmm.
the trader.
Mm-hmm.
So
Mm-hmm.
how did you get started with trading and yeah, just your story of how you got started.
Mm-hmm. Yeah. So when I came to US, it was a dot-com boom. Everybody was into trading. Like that was the biggest boom, probably. And so that's how I got interested. And then I started looking at it. First few years were like difficult. And then I found some strategy, which was a workable strategy in a book. And then I made it work. And uh, simultaneously I found another strategy which is based on catalyst, which is the episodic pivot, and those two strategies, which is a mixture of episodic pivot and swing trading, is really mainstay of what I do since around 2000 now, so it's around 24 years.
Wow. Okay. So very interesting. So you started in the dot-com boom. That's
Hmm.
1999, or like was it before 1999?
No, around 99
99.
to,
Wow.
yeah.
So
Hmm.
so recently I went to the University of Florida and I gave a
Hmm.
lecture at the architecture school. I
Hmm.
went to architecture school and it's interesting. So like I'm introducing trading and like my
Hmm.
success with trading or whatever. And
Hmm.
the students there, I was surprised. They knew nothing about like the meme stock or 2020, 21,
Hmm.
which was a mania.
Hmm.
So it went so that mania, but in my head, I thought like everybody knows about stocks now, but like it was just a mania. It just was a quick period. So like in 1999, I know that was another mania,
Hmm.
and so like, but you stuck around. You were one of the people that like, you're still here long time later, very successful. So was it similar like 2000? Like it was everybody was talking, but from what I understand, in
Hmm. Hmm.
1999, everybody spoke about stocks. The waiter,
Hmm. Hmm.
everybody stocks,
Hmm.
stocks, stocks,
Hmm.
and then 2000, I imagine like when did that die out? And then like the people that made money and they didn't know what they're doing, they kind of fizzled away. And then like the
Hmm.
people that had strategies and studied and had eh, applied like education towards themselves, invested in themselves, that lasted. How like what are your
Yeah, I
thoughts
think
on
I
that?
think everybody was a stock trader at that time. They were like where I stay, uh, my mile from there was a building which was like in a full, like it is a 16 or 17-story building, and that was like in a full building was full of day traders. They were like trading in that particular building. Now that building is like half empty, basically, right? And so everybody was into trading at that time. The entire conversation, if you went to anything, social parties or anywhere, it was like about stocks. So that was a wild period, basically. COVID time was also similar in terms of mania. COVID was like intense mania for a short period of time, while the 98, 99, it lasted for 2 years. So there's a little bit more room for it to run. So yeah, but similar to COVID, at the later half of COVID, you had like almost a mania kind of moves in some of the stocks. But compared to what happened in COVID in 98, 99, you had a lot of stocks which went crazy basically.
Gotcha. And so you decided swing trading early on, or how did you navigate through that mania?
I think I started trading. By the time I started trading, the mania was already fading. So by the time I got in, like, it was party was almost over basically. So essentially, by trial and error, by looking at a lot of things, by doing a lot of research, signing up with a lot of different services, trying out different things. I tried out day trading, swing, the options, futures, currencies, everything, and then I found something which suited my personality. So I'm not really a day trader. I do 3 to 5 days or 10 days of swings, and something which is more longer term will be something like episodic pivot. But essentially, I found it by trying out things, because in the initially we don't know what is going to work for us. You don't have enough understanding also, and so trying out. But the good thing is I didn't blow up, and I didn't lose my capital in any one of these ventures because I was very cautious. So that really helped.
Absolutely. And this is just so important that not blowing up and reducing your chances of like losing exponential early on
Mm-hmm,
because like that is so crucial because if you
mm-hmm,
have one blow up or one major setback, you're not here today,
yeah.
So
Mm-hmm,
it's just so important. And how, did you see a lot of that happened to a lot of people that during that time? Because that during those manias, there's a lot of opportunity and you see people doing well, and then all of a sudden
mm-hmm.
one
Yeah,
setback.
almost all of those people who made money, they gave up the money. Similar to that, I've seen like the money people made during COVID-19 time. They lost a lot of that because they were not, they didn't had the skills. It was just luck, right? And some of these stocks they were just buying and like they were going crazy, and they are holding stocks. I know some people who are still holding stocks which are down 70-80%, and they're still holding. So it's not like uh, in any market, ultimately, if you don't have the skills, it's a very difficult game. There are many better ways to make money than trading, easier ways to make money than trading. This is most difficult field, and if you don't have a age, it's even significantly more difficult. And to the point of not losing your capital in the early phases, that's very important, because if you lose your capital, you're almost out of the game. Most of the time people have very little capital. They start with a small account, they blow up, it's over. So learning without blowing up is really the key, basically.
Gotcha. Um, so when did you feel like you were comfortable enough? Like, you're okay, this is for real. Like, like I see the myself getting profitable even
Mm-hmm,
before you got profitable. Like,
mm-hmm,
this is I think I can do this. Like, this is
mm-hmm,
I'm not like the guys that come and go. Because during
mm-hmm.
the mania, and you're starting out in the mania, so like there's got to be some doubt in in your skills of what up to that point. Because so yeah, how did you go about that?
So it took me almost 3 years to get the confidence that this is real kind of a thing, right? And in the first 3 years, there were like periods when once I figured out everything also, because you don't know the market phases, right? And once you figure out also, so I used to take my account up 40%, then end up giving up all that gain, start all over. So I rode this roller coaster for the first 3 years. Even once I had my methods in place, but then one of the missing piece which I figured out, why was this happening? Why was I making money and then I losing money what I made in 3 months, 4 months, in just couple of weeks? Then I realized that this is because the market turns, or when the situation changes. I was still trading as aggressively or the same thing while the market has taken a turn. So I created a filter on top of my trading. And 2003, 2004 is when I created a filter on top of my trading, which is like the situational awareness model which I developed. And I only traded my strategies when the time was good for my strategies. And when the time was not good, I would just sit out and I would go on a holiday, or I'll just wait it out and not expose myself. So once I figured that piece, which is like all these strategies which I had work very well under a certain market conditions. And if I continue to trade them when the market conditions turn, then I lose money. So I created a filter which is overall filter on top of the trading. And once I had that 2004 onward, like in a 2003, 2004 onward, then it became very relatively easy, because then you know that look, you're not likely, you can predict or you can know when the times are bad and you stay out of the game. So that was the biggest thing basically. I think a lot of people have the trade setups, they understand things, but they don't understand that any setup works in a certain condition, and the same setup in a different condition is not going to work.
Amazing. So, did this come through like a lot of back testing or like real market data from your statistics and like, or maybe statistics also that of stocks that you're observing? Or how did you go about like generating that um the confidence for like to take that vacation instead of actually sitting it out, like, actually trading that market live?
So basically, once I realized, right, that I am good at making money when market conditions are good, then I started looking at what are the different ways in the market in which people have solved this particular problem, right? So I started talking to other traders. I started looking at books. I started looking at all the market timing models. And when I was looking at the market timing models and talking to people, the recurrent theme was market timing based on market breadth is more reliable than anything else. So I started going deeper into market breadth. And then that's when I created my own tool on market breadth, which is called Market Monitor. And so it was like in a trial and error, getting ideas from others, synthesizing the ideas, looking at data, and then coming out with some sort of a model which made sense, and then going in live into that model basically.
Gotcha. So, um, and these, what kind of stocks are you looking at during this time period? Like the big cap stocks, or and you're going long, I assume, and swing trading?
Yeah, I was basically doing smaller cap stocks, smaller float, smaller cap stocks, not really larger cap stocks, basically. And that was the kind of stocks which are very vulnerable to market conditions. Because if the market condition is like not really right for them, then you can lose money very rapidly.
And okay, so smaller cap stocks. So when did you start to get into the smaller cap stocks? Like, was it always you're interested in this? It's like the more volatile movements and or like, yeah.
Yeah, basically all the whatever research I had done and I had looked at, what I had done was like in around 99 2000, I built a database of every stock in the last 40 years which has made 25% move in a month or less, right? So when I built a database of those stocks and I printed out all the charts and all, and then I studied those charts and I looked at every single factor which will explain why a stock makes 25% move in a month, right? So when I looked at that, you cannot explain why a stock will make 25% move based on its earnings or its sales or its price to sales ratio or fundamentals. And the factors which you will see most of the time, if you look at even today, if you look at stocks which make those kind of explosive move, they have capitalization below 10 billion. So they are smaller caps, and almost 70-80% of them will be like even capitalization below $1 billion. So smaller the capitalization, more volatile the stocks are. They are capable of making bigger moves, right? And basically, and also I found out when I did this kind of a study that most of the stocks which make bigger moves tend to be technology, or they tend to be from the healthcare sector or consumer discretionary. So I started focusing more on technology, healthcare, biotech, consumer discretionary stock, which have a capitalization below certain amount, basically, which is 10 billion.
I got you. Would you be looking at any fundamentals of the company or any like for example, I'm a short seller of the I short sell a lot of small cap
Mm-hmm,
stocks,
mm-hmm,
a lot of stocks over under
mm-hmm,
250 million market
mm-hmm,
cap,
mm-hmm,
and I look at their dilution and stuff. So,
mm-hmm.
are you looking at that like from the long side?
From a long side, I'm just looking at I'm trading a chart, I'm trading a pattern based kind of a method, which is whenever there is a momentum burst or a sudden buying comes into a small cap, then that sudden buying tends to last for 2 to 3 days, and the stock typically make 8 to 20 for 40% move if they're very low priced. So I'm not really looking at a fundamental for this particular strategy, which is my strategy of like capturing this 3 to 5 days. But I have a strategy where I look at everything, the earnings, sales, their float, the whole thing.
Uh-huh.
But that's more for if I'm holding something for long term. And now, if you're short selling these small cap stocks, you know this, that every single, most of them now, 90% or more than 90% of the small caps stocks which make a move, they ultimately collapse. Because in most cases, there is no reason why they should be going up the way they went up. Like look at GLMD yesterday. There was no reason why it went up the way it went up, right? So they ultimately collapse. So there is a money to be made both ways. People like you make money on the short side because all these small cap, most small caps are just fugazi. It's just like in a hot air. It's just like some promotion which makes them go, or some sector move, or some news, right? They collapse. So that's the nature of small cap moves. But you can make money on the long side also, right? It's not only short side you can make move, but yes, you can make money shorting small cap all day.
Absolutely. So like yeah, that's a good example, GLMD. Now
Mm-hmm,
that this one for me, I would not touch it on the short side because the float was like really
mm-hmm,
tiny. It was like
mm-hmm,
under a million.
mm-hmm.
However, on the long side, would you ever consider longing something like that with a certain amount of volume that's a tiny float? Like it's and it's these days actually the environment for short selling these kind of small caps, there's too many short sellers like going
Mhm,
around,
mhm,
so it's highly likely to
mhm,
squeeze.
mhm.
So are you considering that in any of your longing strategies?
In fact, whenever I look at like small caps, the first thing I look at, if there is a news on small cap, like today, if you look at APLT, right? There is a news, there was some news in the morning about it. But the first thing I look at when I see a news on small cap is how much is the short interest? Because the short interest was 10 days on APLT, right? So you know that it is going to make a move. So short interest, I definitely look at. I look at whether there was a move before. I look at if there was a reverse split because most of the stocks which are reverse split, they tend to have these kind of explosive moves later because there is almost like they do reverse split and after some time they try and come out with good news to drive their prices. So, but short interest and float are two things which are very important basically. And again, sector is important because these kind of wild moves which you see in GLMD or today you saw in like the APLD, APLT, and VVOS, which is like
Mhm.
some CPAP machine news came in and it went and made like almost 80-90% move before giving up some of the gains. Is they come from healthcare or technology sector. Many of them biotechnology sector.
Very interesting. You pointed all that out. So the healthcare, so biotechnology, healthcare, pharmaceutical, would you batch them all in one
Mm-hmm.
sector? Pretty
Mm-hmm.
much, right?
Yes, pretty
And
much, yes.
yeah,
Medical technology, healthcare, biotechnology, drug discovery, all of them are same.
mhm. And what was I gonna say? The momentum burst. So how would you define the momentum burst and like how do you go about using that?
Mhm. So momentum burst is just basically what happens is in any stock, if it is not going anywhere or there is no interest in it, and sudden buying comes in or sudden selling comes in, then you will see that the stock tends to move in the direction of that sudden selling for next 3 to 5 days. On both sides, long and short, but it tends to happen more on long side because the market has a more bias towards long side. Now, in that 3 to 5 days, depending on the price of the stock, if it's a very low price stock, $1 below $5 or $10, it can make in 3 5 days, it can make like 20-30% move, right? Look at that Neonode stock, right? In just 3 or 4 days, it made like some 60-70% move, right? And basically, so these kind of stocks in a momentum burst, what you want to find is you want to find the first day of the start of the momentum, and as early as possible. If you can find it early, it's better. And then you enter them and put a close stop, and if it works, second day, third day, it goes up. By third day, most of the time, if it is going to go up, it will up. If it is very low price, it will be up 18, 19, 20%. If it is slightly higher price, it will be up 8, 10, or 20%. And then once that kind of a profit is reached, I try and sell into strength. I sell 80%, keep 20% as a slightly longer hold, and keep moving my stop, keep using trailing stop, and I get stopped out. Sometimes you get stopped out same day. Like I was in this VWAS today, from the opening price, and it kept on going and it went to 6, and I moved my stop to protect whatever this thing, and it stopped me out.
Gotcha. So Vivos today. So for those that are watching right now, it is September 18th, and
Hmm.
VVOS had a
Hmm.
move today. I think it went like 100% up.
Yeah, it went up
So
100%. I think almost like went all the way to $6 or something. I think, from
yeah.
so yeah, yeah.
Yeah, from what I remember about
Mm.
VVOS, so last year in December it was under 1 million.
800%, 800%
Yeah,
in one day.
it went crazy. So do you consider the previous runs that the stock has had? even though the
That's when I had researched it because I had seen it at that time. So, and I knew the story because they have something to do with CPAP or the sleep apnea thing, right? And
uh-huh.
basically, so I knew that. And when it showed up today morning, they had some news in the morning saying that there is some sleep apnea for kids or something. I think that if I remember the news, something like that, the news was. And I said, like, this stock has made previously a big move. So this is potentially this can make because stocks have memories, right? And it means like traders have memories, stocks don't have memories. Traders have memories. So all the traders who would have traded Vivas, they would be also interested in today. So it's just like yeah,
Gotcha.
and then.
Now, VVOS, I traded on the short side today.
Mm-hmm, mm-hmm,
So I'm looking at the warrants.
mm-hmm,
Are you looking at the warrants? Because it was tricky because they have warrants from different warrant holders, and
mm-hmm,
one warrant holder is not a very well-known one, and they're
mm-hmm,
they're probably gonna hold it long term. So
mm-hmm,
they're not gonna dilute that. That's the way I'm looking at it.
mm-hmm,
Are
mm-hmm.
you just looking at price action and the previous history and like a or and that's how you're trading it, or are you considering like potential cash need and dilution and things like this?
I know all these stocks, every single, almost all the biotechnology stocks and healthcare. If they come out with a news, they're going to have a dilution, right?
Yeah.
The whole trick is to like find this early in the morning and get in if they start going up, and just like take whatever it gives first day itself, or sometimes couple of hours. I think I was in that trade only for I think before going to the gym, I moved my stop to trailing stop because I said like I go to the gym around lunch hour, and by the time I reached the lunch hour gym, it was like I got stopped out because it was just like and I kept on. So these stocks are going to do dilution. Do I study that? No. I just look at in the morning if there is a news and there is some sort of a catalyst, and I look at the float. I look at whether it is neglected in the sense there is no volume or there was no big moves recently. Even in the case of APLT, it was like that earlier. APLT also had made a 3 or 4 days big run also, right?
Hmm.
APLT is the other stock which made a big move today, right?
Yeah.
So I just looked at that and I said, okay, this is going to make a move. So I have a strategy which I call stocks in play. So this is more like a
Hmm.
day trading. Sometimes they work for 2 to 3 days, and many times they just are like in a couple of hours play, but makes enormous money if you are like at the right price.
Yeah. Well, from what I remember too about VVOS, it was very tricky to play because it kept squeezing. So
Mm-hmm,
like, are you so like these days, because you've been around since 20 something plus years.
mm-hmm,
So
mm-hmm.
are the squeezes now like much more, does it remind you of any time in the past, like the prevalence of squeezes? Because like the VVOS, for example, consolidation, it consolidated, then all of a
Mhm,
sudden squeeze.
mhm,
So like in the past, I remember when
mhm,
I was learning trading in
mhm, mhm,
2016, consolidation a lot of times with weak volume would just die. Now it's
mhm,
like
mhm,
it's like tightening up is ready to
mhm,
squeeze, even with low
mhm,
volume. So
mhm.
what do you any thoughts on that? Any observations?
I think one of the main observation I have about these shorting small caps is till I think around 7 or 8 years ago, this was not a very popular strategy which was used by retail trader. Shorting these parabolic moves or shorting these small caps was not really something which many traders were doing. Some traders were doing, I think, some of those people this idea, right? And basically, now every single trader I meet, he's into shorting, right? Every single trader who's like everyone knows about this. Many people are doing this. As a result, I think a lot of it is because of the it's so popular, right? So premature shots or people who don't have enough skill, they're trying to short, and if a squeeze starts, then they get panicked and they get wiped out or they get squeezed basically. I mean, things like these brokers which used to lend you shares wasn't really a big phenomena. Now every single trader who's a professional trader has another broker which they use just for getting these shots, right? In a center point or some of these other brokers kind of a thing, right? So this strategy is very popular. And that I think it's just like because it's so popular, the squeezes are becoming more rampant because there are a lot of people trading this strategy and they don't have the stomach to hold if it goes against them, and then it just cascading effect happens. I don't know. You are maybe in a better position to answer this than me because you are trading this game more aggressively. I don't really short, so I'm not really into this shorting game.
Yeah, well, it comes down to earlier in this year, they had this viral topic on X or Twitter. It was
Mm-hmm,
all about the edge erosion
mm-hmm,
when things get overcrowded. So
mm-hmm.
from your experience, when there's a little overcrowding, does it hold true, or does it you just gotta adapt? Because like for example, for me, the short side, like I've had some success adjusting my criteria just a little
Mhm,
more
mhm,
tighter,
mhm,
but the thoughts do go in my head. It's like, man, if too many people, does so for me, it's more like I just got to be better equipped, more
mhm,
knowledge, more
mhm,
experience than the next guy.
mhm.
So, um,
Uh,
because like it's getting overcrowded, but at the same time, like I have a lot of, like a leg up. So,
mhm.
any thoughts on that? What do you think when there's overcrowding in long or short or whatever it is?
Yeah, I think there are all ages keep evolving and eroding. Some of the ages which I used to trade, like episodic pivot, the age is eroded because nowadays on earnings, earlier if there was a good earning, stock used to gap up 8, 10, or 12%. Now if there is a good earning, it gaps up 30%, and it makes another 10% move in the same day, and then nothing happens, right? And so age erosion keeps happening because strategies become popular, but that is where the good trader is. Uh, Constantly, a good trader constantly keeps changing his strategies, right? Or adopting. Like I'm not really changing drastically my strategies, but I have done lot of small innovations, and I have created different ages around what was really like for because these earnings related trades nowadays tend to fade. I created a delayed reaction earning as a setup because I realize what is happening, right? So age erosion is going to happen no matter, like most strategies ultimately come in public domain or people figure it out, and they'll be more popular, but that's the game, to be ahead of them. And if you are trading successfully, you automatically tend to innovate, find different variations of the same thing, which I keep telling people, like I say, "Okay, look at Coca-Cola, when it was launched, they had only Coke, right? Now there are 17 different types of Coke, but ultimately it's the same thing. So you can create different ages, which are like a variation of the age, and which new people don't have the capacity to do it, or they don't have the same creativity or innovation to figure that out, and they continue to trade old ways, and then they complain, oh, age is eroding, this is not working. I hear I am a breakout trader, right? I every day hear from hundreds of traders saying breakouts no more work, right? But I still make money trading breakouts, right? What I have done is I changed my tactics. I changed my the kind of breakouts which I buy, where I buy, and those things. So you have to be uh, 10 feet ahead, or 1 mile ahead of the people who are trying to mimic your strategies.
And over the years, when was like the first time you remember like you had to really like sit down and be like, man, I gotta adapt. This environment's not the same anymore. And how'd you go about that? Because I know like the first time is usually the hardest, especially when you're
Mhm, mhm.
starting to get profitable.
I think, and 2012 was a very difficult year because it was very choppy, and there were like a lot of false moves and all. And after coming out of like 2010, 2011, which was like 2009, once the market bottom, it was like you could literally print money. And 2012 is when I started seriously thinking about some of the issues. Sometimes also, like, what happens is not every trader. I looked at a lot of your videos and all. Like, not every trader who trades also thinks about what their ages are, or what their process is, or they have the ability to introspect and try and figure out what this game is, right? In 2012, because I had a choppy year, I spent a lot of time thinking about some of these things. Why is this happening? What ages are eroding? And then if this continues, what am I going to do? Right? Same way, once COVID-19 happened, post COVID-19, also I thought a lot about what is really happening in the market, and why these story stocks, these flimsy stocks like GME and all make this kind of moves. How can I profit from it? And how I created a method to trade these kind of stocks now. and find them. So it's a question of like, what kind of a approach you come to the market with, right? Some people are looking at only mimicking other people's thing, and when your age start eroding, they are just like sitting there. Like, I always give this example in the Bugs Life movie. There is a scene where the ants are carrying something, and a leaf falls, and the ants like freeze and say, "Oh, I can't." And then the supervisor comes in and he says, "You can go around it." So whenever there is a change in your personal age, or you see that your age is eroding, you always have to find what are the other three other ways I can do this thing, or five other ways I can do these things. And it's a continuous process, right? And it's a continuous process. I've been in this business for 24 years, but it still remains as challenging and as fascinating as day one.
Yeah, so like I know like it was confusing for me when I first started, and I think a lot
Mhm,
of traders have the same kind of confusion. It's like it's a continuous game of adapting. It's not like you
mhm,
figure it out and then like
mhm,
now you can just relax,
mhm,
because you're just constantly tweaking things up, and those small changes just like add
mhm,
up, and they
mhm.
over time. So like how small are these changes sometimes that you're making for adapting?
Some of them are tactics, like in terms of when I will enter, or like I created this tactic earlier. I used to like hold positions for longer term when I used to get into earnings play. Then I found that most earnings play nowadays are becoming just 1 or 2 days, and then they end up giving up almost all the gains because they make such a big move in the 2 days. So I created this tactic of like 80-20. So I sell 80% to lock in the profit and keep 20% for a longer term. So some are minor, some are really new setups. I am trading completely new setups which didn't exist 10 years ago for me, or some of them didn't even exist 5 years ago or 3 years ago. So I am developing setups because I can see some of the ages eroding, which were very good ages. So I don't want to be caught like if you're a fisherman and you go to a lake, and the lake become very popular and everybody start fishing in the same lake, you're not going to get any more fish. So you have to keep on looking for new lakes, basically. And one of the things which I like some years ago, I read a research on ants and ants behavior, right? So which was very interesting, like which many people don't realize unless you really get into that. In the ants, when they are like there are these worker ants, and there are two types of worker ants. The 80-90% of the worker ants, they have assigned role, they just do one thing. And then there are these 10%. You'll see, if you see ants moving, there are ants which are just going in line, and there are these ants which are going outside the line. So those 10 or 20% ants, their role is to like look for new sources of food. So they are specifically designed, or they are trained to look for a new source. If the ants continue to only follow one path, they will never find new food sources, right? So same thing, we as a trader have to look at it. I talk to traders all the time. When I talk to traders, I always get ideas from others. Then I come back, put it in my laboratory, and see how can I use this particular idea in my own setups, or can I use this idea to change, find something. I'll give you an example. Some years back, 2 or 3 years back, I was talking to some trader, and he gave me an idea. He trades something which was like he was looking at stocks, because as your account size increases, there is a limit in terms of you can't really play this small cap game all your life, right? Because once your account size increases, there is a limit in terms of how much you can get into this kind of thing. So I was talking to this trader, and he had this method where he was looking at uh, it's like stocks which are owned by 5,000 funds, stocks which are owned by 2,500 funds, and stocks which are owned by 1,000 funds. And the whole idea was this: more established stocks, if 2,500 funds own the stocks, they are not going to make explosive moves, but their moves are more predictable, right? Because the trading is dominated by funds, not by the retail traders. So that gave me an idea as to how I can create a setup which is like it's not as explosive as small cap, but I can put a lot more capital, right, at work. So you have to continuously look at new setup ideas, and even if a setup is working, I'm still like, and I spend almost every day 1 hour doing some R&D to try and find new ideas.
So not only are you trading and you know trading your successful strategies, but you're constantly thinking like
Hmm.
when do these thoughts of new ideas for trading pop up? Like all the time randomly, and you're like, oh, okay, that when I get back, I'm gonna explore that. Or like how do these ideas show up? Just randomly, you just write it down, just go start
Hmm.
doing work and data or whatever later. Or like how do you go about that process?
So what I have is I have a designated time every day in the morning where I just spend 1 hour just looking at uh, data or studying the market, basically, because if you get it done in the morning, if you keep it for evening, there are always temptations and you don't get it done. And I have a set method where, like, and if I get an idea, I put it in a one particular jar or idea jar kind of a thing, and then I will come and revisit that idea. And some of the ideas which I picked up or I generated, it takes 2 3 years to make them work, right? Because ideas don't work out of the box. You have to be at it. So I revisit some of the ideas which at that time when I tried to make it work or I thought about it, I didn't think it is going to work. Then I come back to that idea. When I come back to that idea, I see another way to make it work. So I try and spend at least 1 hour. And if I get excited by some idea, then I'll spend entire week, 2 weeks after trading, going after that idea to make it work, basically.
Gotcha. And so your setups from when you first started to now, like, when you were starting out, did you just have like a couple that you just did repeated
Hmm.
that until you built yourself a foundation, a nest
Hmm.
egg, or, a cushion, if you will. And then like later on, as you get more experience, like now, um, like how many strategies would you say you had, like in your, overall compared to, yeah.
I have basically means like in terms of categorization, I just have like two basic strategies. But under that, there are a lot of setups. Like my one basic strategy is to find a lot of singles, because singles happen more frequently. Singles, you can trade with lot of less risk. So I have the strategy which I call it single strategy. Under singles, I trade breakouts, I trade exhaustions, I trade anticipation, I trade biotech, with a slightly different twist. I trade technology with a different twist and things like that. I have 7 8 strategies under just hitting singles, right? But there is another strategy because that is to find home runs. Now, under the home runs, I have found, like, what I was trading for home runs 20 years ago, I'm no more, even that strategy is no more my bread and butter strategy. Like most people in this business know me for my episodic pivot strategy, which I created 20 years ago. But episodic pivot only gives you 2 or 3 trades in a year. So you can't base your entire strategy on that. So I created another setup idea, which is as powerful as episodic pivot, and I use that for finding mini home runs or home runs. So under home runs, mini home runs, I have 3 4 strategies, and combination of these is what I trade, because I believe and I think, and that's the prudent strategy for any trader. You should have a very good singles factory, because then singles allow you to finance a home run, because home runs require wider stop, they require you to take a bigger risk. And if you don't have that singles, then if you're just trading home runs, if one home run doesn't work, you're going to be out shit creek. If 5 home runs doesn't work, you're going to be in 30 40% drawdown, right?
Yeah, absolutely. So they building up like a
Mm-hmm.
cash flow kind of trade, small
Mm-hmm.
singles,
Mm-hmm. Mm-hmm.
and eventually a home run down the line. Those two or
Mm-hmm.
three trades that come a year, be ready for
Mm-hmm.
it.
Mm-hmm.
Um, Now how do you handle like a setback? Let's say the home run doesn't work. It's mentally, how do you handle that? Like coming back from big losses mentally, or if it.
That's why I do a lot of singles. If I get into some home run and it doesn't work, I always like and go back to hitting a lot of singles to recover that loss.
Mhm.
So like, and that's why I'm always like, and people say, oh, why focus on these small moves of 8 to 10%, 20%? This is a cash flow trading. Nobody becomes rich by it. I know that, but like, and it allows you. Uh, One good thing about hitting singles psychologically also in this game is that if you are constantly hitting small wins, you feel good, right? You are constantly in a good mood to trade. If you get into a losses and you get into drawdowns, it drains your energy. It's like, you don't feel like trading. You're like, you lose your confidence, right? So
Yeah.
having a combination method allows me to do that much better.
Beautiful. Now you mentioned biotechs a few times. So
Mm-hmm.
biotechs, from my understanding, especially in the small cap space, like they're mostly never gonna do anything. Now,
Mm-hmm.
however, they have these really nasty squeezes on the short side, which I'm sure
Mm-hmm.
you like
Mm-hmm.
from the long side.
Mm-hmm.
Um, is that why you like what you target them? They just have this they squeeze a lot, you know? It's like
Mm-hmm.
they're almost like designed for
Mm-hmm. Mm-hmm.
people that invest in their warrants or whatever to
Mm-hmm.
get rich, you know, like
Mm-hmm. Mm-hmm. Mm-hmm.
so
Means I've been trading biotech for many years, right? And I had a very big loss also in one of the biotech where I lost 35% overnight. But the essence of biotechnology stocks is that they are stories. Okay. Out of so many stocks which are in the biotechnology sector, at best 8 or 9 are actually going to make actually the product, and that product will actually be successful, and they will actually end up becoming a $1 billion business. But every day you'll see a news which comes out and say, oh, this drug is potentially worth 10 billion, 1 billion around. So it's the nature of the market in biotech. And but the there is one thing which I study every day, which is stock which make 20% plus move in a week. And based on that study, we know that biotechnology stocks are the one which are capable of making that kind of a move. So I just trade them because they make big moves. Rest of it is like, and I think it's a completely a sector which like, especially when market conditions are good, they go crazy. And then there is a biotech winter. When there is a biotech winter, none of those breakouts happen or they don't even work, right? That's the
yeah.
nature of that industry.
Yeah,
Uh,
so you mentioned the story behind it. So it's like when I'm thinking about it, I'm thinking about like okay, so like the story, okay, like Alzheimer's usually news,
mm-hmm,
cancer news,
mm-hmm.
we had like, you know, what was the one today? VVOS,
Was the
apnea.
CPAP, it's like
Yeah.
the sleep apnea thing. And APLT, I think it's something to do with cancer or something, I think, basically.
So does that help you like you're
Mm-hmm.
to enter the trade, like to have some kind of story attached to it, like they're
Mm-hmm.
yeah,
Yeah, it means like if you've been, I've been in this trading these things for so long, and I read the news on biotech. So, infant drug, some rare disease, cancer, some this thing, and in medical technology, there is biotechnology and there is this medical technology. In the medical technology kind of a thing, anything to do with skin, some machine which will like remove a layer from your skin or some sculpting thing and all, they all work. Anything which will like in a weight reduction means work in the short term, right? So you just have to know the field a little bit, as to anything which is like going to remove wrinkles is always going to work, right? And or in the short term people get excited about it, or anything which is going to help you non-surgically get rid of fat, is like, people get excited about. So knowing some of these things is what, when you look at the story just needs to sound plausible and attractive.
yeah, and that right there brings like I've interviewed some people that dealt with the dot-com boom just like you,
Mm,
and
mm,
they told me in the 1999 mania that had a lot to do with it. You know, it's like when laundromat.com or
mhm,
laundromat said, "Oh,
mhm,
a laundromat company
mhm,
said we just bought the domain for
mhm,
laundromat.com." The
mhm,
stock boomed, or
mhm,
pets.com,
mhm,
or
mhm.
did you see those stocks go as well? Were you part of any of those?
I was like for a little while, but like, and by the time I started actually seriously trading, I was at the fag end of that boom, right? But you see the same phenomena happening in current market, right? And I remember, I don't remember the ticker. You might remember a couple of weeks ago or few weeks ago, there was a stock which came out with a press release saying that they are going to launch a TikTok account about
Oh
AI,
yeah, that's right. Well,
and the
I
stock went up like some crazy 40-50% that day. I was like, really? You're means like any damn fool can open a TikTok account about, and
yeah.
how, but the market loves stories, right? And especially if there has been a reverse split or the float is low or there is short interest, the market for few days flies based on that news. And then people like you come and like poop the party, right?
Yeah. So what do you think about like the cycles of the markets, like the
Mm.
seasonalities?
Mhm. The biotechnology has its cycles, right? And biotechnology currently in the last couple of years has been working well. A lot of small caps in biotechnology have done well. But when the season goes like there is like if you see 2 3 or 4 years ago, not many biotechnology stocks were working on the small cap side, right? And because there was like almost a biotechnology winter. But then there is also the seasonality of FDA approval and the biotechnology conferences and all these things. I don't go into that detail. There are people who spend all the time and they have this biotechnology conference calendar and they have these things and all. I just look at the news, come in the morning, look at the news, see what is gapping up, and just see if it is high short interest. Anything which has a short interest of more than 8 days, uh, I take like a small risk to see if it works, and many time it works, right?
Now for the short interest, are you looking at the what's reported twice a month? Or are you
Yeah,
looking at
I look at market surge, which is like the market smith database, and I look at the short interest basically.
gotcha. And you mentioned scaling earlier. So like how do
Hmm.
you go about scaling in and scaling out of the trade, well, for profits or for, just to manage the risk?
Hmm. I don't scale into a trade. I buy everything which I want to buy upfront. So if I want to buy 5,000 shares, I'm going to buy 5,000 shares upfront, right? But in order to exit, what I try and do is like if I buy 5,000 shares, my idea is to like even today, like in a Vivas, when I bought, I was looking at, uh, uh, I didn't exit the full position because I knew that there is always in this kind of small caps, uh, there is tendency for them to make bigger move than you anticipated, or some crazy things can happen. And in Viva's case, last time it had made 800% move, so that was in the back of my mind. So what I did is I created 680 and 20, which is 80/20. So I decided to sell 80% when it reached around $6, and round number was and by that time it was up a lot. And then 20% I put it in just a 25-cent stop, and I got stopped out. So I scale out, and sometimes what happens is I don't scale out 80% in one go. I see the stock going up and I see that this is ridiculous. This is like 30 40% move has happened. So I sell 20% and see, watch it, and then sell another 20%, and then sell another 20%, and then remaining, sometimes whatever is remaining, I sell 20% of that also, and then I'm left with few hundred shares sometimes, but I still keep on holding it with a trailing stop.
Gotcha. And so what is your ideal trade? Like more or less like the time frame that you hold it, the the price range, the sector, like what is an ideal trade for you? Like most ideal.
Most ideal trade for me is something which is priced above $100, right? Which is like in a breaking out, the dollar breakout or the high price stocks is what I trade, because it allows me to put in large capital at work. So something like, say, I traded O'Reilly's a couple of months ago. So I got in with a $10 stop and it went up like some 70 $80 in 5 to 6 days. Or I traded AutoZone and I got in AutoZone with a $20 stop and it went up like around $100. So those are the kind of stocks where 5 to 6 7 days of hold period on those high price stocks is my ideal trade. I trade these small caps just for fun because I cannot really put in a lot of capital at work on small caps. But on a large stock, high price stock like AVGO, if I buy 5,000 shares of AVGO, I can put a lot of money at risk, right? But can I buy 100,000 shares of a small cap stock? Yeah, in theory, yes, I can buy, but the risk is too much, right? And if you see the higher price stocks, they don't break out with 4% or 5%. Many of the high price stocks, they don't even make big moves, but they break out with 2%, 1%, and they go on to make 5, 6, 7% move in next 1 week or 10 days. But because you can put a lot more capital, you can move large capital 5 6%, versus on a small cap I had to put smaller. So it requires a lot of trade to move the account with small caps.
Excellent. So now for the cash flow trades or for the singles, how would you go about that? Like you'll go about trading, like let's say you have to start all over again. You have to
Hmm.
get a lot of singles to build yourself up.
Hmm.
Would you do the small caps getting singles or the ones you just mentioned over $100 for singles and then, and work your way up to the bigger trades for more
I would
capital?
always like go for the higher price stocks, no matter what is the size of your account. Like look at small caps. If you are trading small caps, you need stops of 8, 10, or 20% because they are so volatile, right? And some of them are
Mhm.
so volatile intraday also. You need stops which are wider to give them the room to run. While many of these stocks which are high priced and high liquidity, they are like you can get away with 2% stop. Sometimes you can get away with 1% stop, and that that is why it's much better strategy, because anything where I can get away with 2.5 or less stop is what I prefer for singles. uh, Wider stop in small caps, because of the wider stop, you cannot put large amount of capital in them, and that restricts. I can put in, like, say, only 5% of my account in, but large high price stock I can put in 40, 50%, right? And the risk is very low. The risk is so low.
Excellent. Wow, great point.
And it's the
Um,
same thing for like in a high liquidity stocks. Like I have this strategy which I created of these stocks which are owned by 2,500 funds. They are not going to make, sometime they make explosive move. They make like, but you can get into those stocks with just sometimes if you're watching them, you can, like I did a trade in AMT some just like in a couple of days ago, and I got into it and my stop was just 1%, and it went up 8% for a 1% stop. That's very nice, right?
yeah, that's an excellent point.
Hmm.
The difference is because yeah, like in the small caps, if you go too big, it can cause ruin.
Yeah,
Um,
and overnight risk is so high also.
yeah,
I can go to sleep holding a high price AMT kind of stock or Equinox or some stock, and I don't have to worry. Overnight risk is very low comparatively. I can buy IBM or I can buy some of these stocks, and the overnight risk is very low.
yeah. Now, do you ever do any other things like options or other instruments, I guess?
I don't do options because when I started early years, 3 years, first 3 years, I experimented with options. At that time, I didn't really find success with options. And then typically this is what happens with trading most of the time. You tend to stick to what worked for you. For me, stocks worked, so I remained with stocks. Can I learn options? I have so many people who are willing to teach me option now, but then I always look at it, ki, look, and this thing what I'm doing is working. Why will I spend 6 months of life trying to learn something, not knowing whether it will work or not, and in the process lose so much opportunity on what is working? So I don't trade options, I don't trade futures for that reason.
Gotcha. And so to start to wrap it up, what is your most memorable trade?
Best trade in terms of like was Facebook. I bought Facebook in terms of size. I bought like 50,000 shares of Facebook on earnings at $33, and because the size was so big and for that kind of a thing, and I sold it at $70 in 6 or 7 months. So that was like in terms of actually absolute amount of money, that was good. But since then I have done a lot more trades, but in terms of that was the best in terms of like right at open, I bought it and I held it till it doubled.
So for 6 or 7 months, was that the game plan going in, or do you adjust your
Yeah,
game
that was the
plan?
game plan because I thought it will, based on the earnings and sales and everything, this thing should at least double. So I thought it is like it will go to 65, $70, and that's what ended up happening there.
And how do you keep yourself in the trade that like as it's going your direction that long? You have a target and you're sticking with it? Because like if you're in the money that much, like are you tempted to take some off the table, or how do you deal with that?
Nowadays, I will take some off because the market has changed. The market is no more the same way. But if I do a analysis, like the second kind of stocks, the home run kind of stocks, when I'm trading, I do a lot of analysis. And if I'm convinced that this stock is likely to double, then I'm going to hold it for that move, right? But unless it starts showing something which is worrying kind of a thing. But if it is not, then I don't really think that I should be worried about it. The home runs you can only hit if you're willing to give it a room to run, because they don't happen overnight. Nowadays, some of them do happen in small cap, but they don't happen overnight in a stock the size of Facebook and all.
Yeah, and so home runs. How do you know when it's a home run? Like how do you like realize okay, this is one of those once two, three times a year trades? Like when does
Uh,
that
the,
yeah.
there are two things I have like and I studied extensively stocks which make home run kind of moves, and there is two distinct characteristics or two different cases in which case home runs happen. One is when there is a growth kind of a stock and it starts growing sales, not profit, but sales at 39% plus quarter after quarter, and especially when it has two quarters in a row of 39% plus kind of a sales, then it is capable of making those explosive moves like what this APP Applovian has done, or like an NFS did, or Shopify when it was growing did. So that's the growth category kind of a stock. So I always look for like every day I scan for stocks which are sales growth of 39% plus sales growth on 25 million plus sales, not on very small sales. The second category which is very important for finding turnarounds. Whenever you have a stock which turns around in terms of its profitability, or like the stock is in 2 3 years decline and it turns around, Abercrombie and Fitch last year or a couple of years, like in the last 18 months, is a good example of that. So when there is a turnaround, you see that in the figures, you see that the stock really surprises the market with profitability and sales growth. So the turnarounds is something which can stick and it can give you a home run. So those are the only two situations which make me get very excited about.
Excellent, excellent. All right, Stockbee. So
Mhm.
yeah, how can people find you in case they
I
want to get a
think
hold of you?
they can go on Twitter, they can go on my YouTube channel, blog, so everywhere. Like anyway, Twitter is the best way. Most of the people find me on Twitter nowadays, basically, or YouTube.
Yeah, nice. Okay, great. I'll have the YouTube channel in the show
Mhm,
notes. And yeah,
mhm.
thank you, Stockbee, for coming on the podcast. This has been excellent. A pleasure having you on. Thank you very
Hey,
much.
thanks for having. Good
Yeah, thanks.
talking
Have a
to you.
nice day.
Thank you,
Bye.
thank you. Bye.